Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and there are plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? Today I have with me Hemu Rustagi, Wise Invest. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your questions on themoneyshow@etnow.tv. Hi, good evening, Hemant, and welcome to the show. And before we take on our viewer queries, let's discuss about the 250 rupees SIP, which is under proposal by SEBI. A great move in order to increase participation and to help people, come into equity markets. But we also have 100 rupees SIPs going on in specific funds. And thanks to the digital progress that we've been seeing, so many platforms, in just one click, you can buy a mutual fund. But an interesting way to have 250 rupees SIPs now?
Oh, yes, Kavita, I totally agree with you. I think what we have seen over the last few years, how SIP has allowed lakhs of investors in our country to invest in market-linked product through the mutual funds. And now we are seeing that our SIP book is more than 70,000 crore. So obviously, we've always been talking about having the equity cult in our country, and I think SIP has ensure that slowly and steadily we get there. I think this step of allowing SIP of rupees 250, I think is a great step. It will allow almost every investor in the country to start investing in mutual funds. And I think the important thing is that the biggest fear that every investor has is that they always think that I don't have so much money to invest. If it's a large money, I think that fear will go away. And second is the fear is also of volatility. So once they start investing, they spend some time. They will understand equity as an asset class. They will maybe keep increasing their allocation to that. And I think the way we have seen how SIP has allowed investors in India to build wealth, you will see more and more investors in our country building wealth through this. As you rightly mentioned, I think some of the funds are already doing 100 rupees SIP. I think this will allow kind of industry to take a decision at the industry level, and SEBI will kind of trying to ensure that. And once that happens, every fund will have a SIP of 250, which means that investor will have a wider choice as compared to today, where there are only few funds that are offering 100 rupees SIP. But I think it may not go down to obviously 100 at this level for the industry, because there are certain costs involved, and obviously there are certain other aspects that have to be looked at. But I think bringing it down to 50 as the minimum amount is I think is a great step.
Point of view, it's a great step, but then as far as the industry point of view is concerned, do you think they'll be able to manage the cost with 250?
Well, it's going to be a bit challenging, Kavita, let me say that. But I think what you will see that, what we are seeing also even in the rural, semi-urban areas, okay, the way people are comfortable with digital. And I think most of it should happen through that. Maybe over a period of time, you'll see other channels kind of becoming active in that space. But initially, you will see that maybe getting restricted to that. And obviously, there will be small investors. What happens is, it's not that somebody who's starting at 250 will remain at 250. You would definitely expect them to increase the size. So all the distributors, mutual funds, he may like to kind of include them in their process. Slowly, maybe the amount will increase. At this point in time, the costs can be a little prohibitive. But I think over a period of time, as the size of investment will grow, as more and more investors will use digital to kind of start investing in mutual funds, the cost, I think, to an extent can be handled.
Also, just a small calculation, if you start your SIP of 250 rupees every month, we want to become a crorepati, how many years would it take?
Well, if I assume a return of 12%, it's going to take around 50 years. Obviously, when you invest for 50 years, two important aspects, like I mentioned, that you're not going to be continuing investing 250, maybe you'll increase investment over time. And, in all probability, I think the returns are going to be much higher than 12%. But since we are trying to kind of project how much investor can expect and how much time it will take, it's better to be a little conservative. Yes, it will take around 50 years. For 50, like it will take 44. And for 25, like it will take around 39 years.
To really be careful of, it's okay to start with 250 rupees, but then you also have to make sure that you increase your SIP amount, because 1 crore in 50 years would mean how much?
Well, I agree that if you look at inflation over the next 50 years, obviously, it may not be amount because, there are a number of times when we talk about investors wanting to become a crorepati. The fact is that even if you become crorepati, it does not take care of all your needs. But again, like I said, I think the issue is how do you ensure that more and more people start investing in market-linked product? How do they create wealth through the stock market or different asset classes? So I think in that direction, it's an important step. I agree with you that, by just investing 250, even if you become 1 crore, it may not be enough at that time to take care of all your needs. But like I mentioned earlier, my belief is that once that fear of, investing into market-linked product goes away, you definitely will expect, one, the base to become wider, and of course, investors to start investing more and more. And we always talk about, step up SIP, and it's a magical thing because it gives you compounding and it allows you to build a much larger corpus. So I believe that once they begin investing, small investors begin with amount as little as 250, they will increase the amount, they'll become comfortable with the asset class, and they'll be able to build much larger corpus. And as I mentioned earlier, that the returns you can be expected realistically to be more than 12%. So maybe it will not obviously take 50 years to get there.
Right, so that will be all the magic of SIPs, and under proposal rupees 250 SIP. But having said that, it's very important for you to not only just start investing via SIP, if that's the route you want to opt for, it's also important to step up your SIP. Hemant, let's move on to our viewer queries, and let's take Vinay's question from Mumbai. It's via email, and he has started investing in mutual funds, and he wants to know if any changes are required. Is ICICI Pru, World Discovery Fund, HDFC Top 100, Invesco India Contra, Motilal Oswal Flexi Cap, Axis Small Cap, Motilal Oswal Small Cap, Nippon India Small Cap, SBI Large and Mid Cap. These are the funds in which he's doing SIP, some 2,000 and some 1,000 rupees.
Well, Kavita is currently investing around 11,000. I think he has around 8 funds in his portfolio. So clearly it's a case where you see over diversification in the portfolio. And second is, he hasn't mentioned his time horizon. Considering the fact that he's investing all his money into equity fund, I'm assuming that the intent here is to invest for a longer term and build wealth. So if that is the case, he can obviously continue investing in equity fund. But like I mentioned, there is definitely a case to consolidate the portfolio and reduce the number of funds. So my recommendation would be that out of the existing funds, HDFC Top 100, he's investing at 1,000. He can increase that amount to 3,000. Then he can retain one small cap fund, which is Nippon Small Cap Fund, where he's investing 2,000. And the remaining 6,000, my recommendation is to add 2 new funds as against all other existing fund. One is a multi-cap fund, which is a Kotak multi-cap fund, where he can invest 3,000. And the second is a large and mid-cap category fund, which is Motilal Oswal Large and Mid, where he can invest 3,000. So in all, 4 funds, it will become more compact. He will have the right kind of exposure to all 3 segments of the market, and I think the portfolio should be better.
All right, so that's the solution coming up for Vinay. We don't have him on the phone line. But let's move on to our next viewer from Jaipur, Anuj. He says he's 34 years old and he's been investing in NPS and corporate group funds, especially the SBI pension fund and life cycle. That's the choice in it. And he wants to understand if he can change this scheme and he can switch into a corporate group fund and better investment as compared to an NPS. What would that be?
Well, I think he's mentioned that he's in life cycle fund. Obviously, there are 3 options. He hasn't mentioned which one he has. There is LC75, there is LC50, and there is LC25, which basically tells you how much maximum exposure you can have in equity. Now, what happens in the life cycle that till the age of 35, you have this maximum exposure. And thereafter, for example, if you look at aggressive, it starts coming down by 4% every year. So by the time you get to the age of 55, it comes down to 15%. Considering that his age is 34, my belief is that since he's trying to build a corpus for the long term, he has enough time on hand. I think his focus should be primarily on equity and maybe some exposure to debt. So, my recommendation would be that he should move to equity asset class, wherein you can invest as much as 75% and keep it there till 50 years. And thereafter, it goes down by 2.5%. And by the time you're 60, your equity exposure is 50. So I think that will be better for him in terms of asset allocation point of view. Yes, I mean, if he's in the corporate plan, if he wants to change his scheme, he can do that. Now there are two ways. Sometimes what happens, the employer right from the beginning allows the employee to change the investment plans. If that's the case, it can be done. If not, he can log into his personal account, and his employer will have to kind of allow him to change the scheme. So definitely he can do that even though he's in a corporate plan. Like I mentioned earlier, my recommendation is that he should go into equity asset class.
All right, I think that will be all. Thank you so much, Hemant, for being on the show and helping our viewers with their mutual fund portfolio queries. And with that, it's a wrap. I'm going to leave you with our WhatsApp number and email ID. Thank you so much for watching. Goodbye.